Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are taking a look at another requested stock, and that is Cal-Maine Foods, ticker CALM. They are mostly in the egg industry and therefore are essentially a commodity business. So if the price of eggs is high, they make a lot of revenue, they make good profits, and that's what I'm seeing across this company because there's a lot of inconsistency here. On their face, some of the numbers aren't too bad, but once we dig into them, we'll see what's going on for real, or what's really going on. So the projections, I'm coming up with a fair value of around $91, which I still feel is high. So due to the inconsistencies across numbers, we're going to have a 30% margin of safety, which means the buy would be right around 64, which is right about where the 52-week high for the stock was. So a wider margin of safety might even be necessary because the issue here is this isn't your typical company. It trades in line with the egg market. And so I don't feel like the fair value is quite as attainable as it is for other companies who are improving margins and driving more sales. So we start with the earnings yield. 5% is pretty good. That's about what we want to look for right now. Cash flow yield looks very high. Dividend yield looks very high. ROE looks very good. Debt to equity looks very good. Gross margin of 38%. It's a little low, but it's not bad. Net margins of 24 are very good though. But we see that those are very different from their averages for the margins, for the ROE, for the dividend, for the cash flow, everything. And the payout ratio is a little high. So we see revenue growth over the past few years, but declines expected going forward. Earnings per share growth, declines going forward. Cash flow growth, very inconsistent. So we end up with a negative share count growing at 0.13 to 1.4 every single year. Assets have some decent growth, but not as fast as liabilities. And dividend growth is, again, inconsistent. And when we look at the actual numbers here, we can see all of this in play. We see first the gross margin is all over the place. Last year was an incredible year for them with the very large egg prices. Eggs were selling for 150% more than they were the prior year. So they came in with very high revenues and very high margins, which helps them get a $2.72 earnings per share, which is the highest earnings per share that we see here, and contributed still the lowest amount to their valuation. Net margins are definitely all over the place. They almost broke even in 2020, but 24% in 2022, 7.5 in 2021. Again, we see up and down. What's really going to help is these graphs here. So the trend is, for the most part, up in revenue. As to be expected, population grows, eggs become a dietary staple, and we see some good slow growth across the revenues. Gross, net, and EBIT, we see very similar growth. Little to none in 2019 and 2020, but 2021 and 2022, we saw some good numbers. The balance sheet, assets were pretty flat. They've started to increase. We'll see how that continues. And the tangible assets have been pretty steady. It looks like they did do a jump in 2022 along with the total assets, and that it looks like they used those high returns from 2020 to invest into the company, which is really good to see. Tangible book value way outpaces the liabilities. Liabilities are growing very steadily, but they're so much smaller than the assets that it's not a huge issue. Cash flows, this shows how incredibly inconsistent they are. They were losing money in 2019, 2020. 2021 wasn't too bad, and then a huge jump 2022. For 2023 and 2024, we are using the average cash flow over the 4-year time period prior. So that's putting them here just under 100. So about twice what they came in 2021. And we'll see what they actually come in at, because things are so inconsistent that it might be another negative year. We'll have to see. Dividends are all over the place. It seems like they have a dividend policy kind of similar to Zim's, where it's just a portion of the earnings gets paid out. And they started this year with over $2 dividend payment because last year was so good. And that's what we're seeing here. 2020, they actually suspended their dividend. In 2021, they started to rebuild it. They paid a very small amount. And more recently, they have been paying more. This should show our inconsistencies. So we have the share price here in the dark blue. And it's very flat, very stable here. And then we have cash flow all over the place. Dividend all over the place. The balance sheet is rather steady, and it is growing up here. So that does contribute quite a bit to the valuation. And our calculated fair value is here. So the fair value has jumped above the share value. It's currently trading above the earnings and cash flow valuations, but it is below the fair value, balance sheet, and dividend. So I think that dividend we can kind of pull down, take out that $2. We'd be looking for something more in line with like this 73 in all reality. The balance sheet is showing some good growth, so it might be a little undervalued. Something more towards the realm of 50 would be nice. But due to all of the inconsistencies, especially with the dividends and the cash flows, definitely not a company that I'm looking at. If you want egg market exposure, it wouldn't be bad to have exposure to it. It definitely looks like it's undervalued, but the actual prospects of the company, especially in the long term, aren't looking so good, because when we go to metrics, we see valuation for 2020 was $113, and that falls this year to $93.84, which falls next year to $67.38. So if they continue operations as they're going right now, we're going to see year-over-year declines in the actual valuation. It is currently underneath that 2-year valuation, but when it's something like this, it's tough for it to reach that fair value, because investors are seeing these declines and they're not investing in it. So the ability for it to reach that potential is very low. But that's what we're seeing for this one. So I want to thank you guys for watching. Please like if you enjoyed the video, comment what other stocks you want to see, and subscribe, so that way you can stay up to date with everything. I'll catch you next time.